Hey, this is Awais with EminiPlayer.net, and this is a recap for Friday, April 25th. So heading into the open, we were using 69 to 71 as the micro bull bear zone, and our bias was bearish below that area. And the plan mentioned that even on a break above 69 to 71, the bias wouldn't necessarily shift to the upside, but now we would just be a bit more cautious on taking shorts. Given the overnight weakness and the weakness in the other markets, it was pretty high odds that we would continue lower, especially if we held below 69 to 71. The main target on the downside was the 55 to 57 initial support zone, and that was the area where responsive buyers could be active on first test for a bounce. But if the momentum and volume remained quite high, then there was still potential that we could test 48 half to 50 half. So it was a pretty bearish bias heading into the day. The other markets were weak, so our focus was really on the short side. On the econ calendar, we had consumer sentiment at 8:55 a.m. Central, but I covered in the plan that it doesn't look like the market's really waiting on that econ release, so we don't necessarily have to wait for that report to get out of the way before we enter the market. It could be a non-event. So that being said, let's jump into the charts. So right off the open, we can see over here that we get just a little bit rotation back up, and then immediately it's rejected. Now, this didn't quite go all the way up to the bull bear zone, but when the reward potential is relatively high, right, because from 68 or 67, we can get a 10 to 15 point move lower. So when the reward potential is high, it doesn't make sense to wait for the exact trade location to get on board, right? If there's directional conviction in the market, if there's volume and volatility, and your target is 10 to 15 points away, then you can simply use a wider stop to get involved in the trade, right? It doesn't make sense to wait to get 1 or 1.5 point better trade location and then miss out on a 10-point trade. So in this case, right off the open, our focus is on the short side, right? It just makes it easier to execute when you know which direction you're focusing on, because you're not spending time and energy trying to figure out, is the market going up or down? You're simply trying to identify the best spot where you can get on board for that directional move. So that was really the focus off the open. I personally ended up getting short at 67, right after 68 got rejected, and that's mainly, again, because I was looking for a short setup, right? I was actively trying to time a short, and of course, the closer it is to the bull bear zone, the better. But even if I have to use a 3 point or 3.5 point stop, it's still worth it to get on board when your target could be 10 or 15 points away. So over here, we take this trade right off the open, short, comes down to pre-market support. Now there are a couple of ways to deal with this. One is, you can take a scale out if you want at pre-market support, and then, just put the trade back on when you get the little pop. Or if your style is more about just getting into the trade and holding it to target, and you don't want to really kind of complicate the execution of that by, scaling out or scaling back in and things like that, because that does add a layer of complexity to the trade, then you can simply wait it out, right? So then you can basically expect a short-term bounce and not let it shake you out of the trade, right? It's coming down to support, it holds to the tick, right? Goes up. Now this is another opportunity to either get on board, or if you feel like you don't have enough risk on, then you can actually even add to your position when you get a bounce back into this overnight low 24-hour VWAP, and it's a good spot. It's a good trade location to get in, and our target is still potentially 10 points away, right? The main target on the downside was 55 to 57, so there's still enough room that if you're getting in at 65 half, your stop can be something like 67 half or 68. So the reward to risk is actually very good, even right here at 65 half, right? You're using a 2.5 point stop, and you have potential to get 10 points out of the trade. So the reward potential is 4 times your risk, which is extremely good. So even if you missed it, it's not about just being early into the trade. You can still get on board over here and then target a move lower down to the initial support zone. Now, I ended up taking profit on this move lower over here, mainly because the other markets were actually slamming into their support zones. And earlier in the we've covered in previous videos that the S&P has been relatively stronger compared to NQ and TF, And since NQ and TF were slamming right into some pretty decent support, this is a good spot to at least scale out. And then you can hold the remainder of the position down to initial support. But this is really the ideal and the final target, right, on this trade. And then, according to the trade plan, we covered the idea that this is where responsive buyers could be active in the market. And this is a long setup down here as well. And again, it's not just because this is the primary support zone on the day, but it's also because the other markets were really hitting some very good support areas. Typically, if you're timing a counter trend trade and you're getting good trade location and the other markets are hitting good support, and you're not like in this trend down day context anyway, typically those trades work out really well. And you can see on the internals, for example, that we're only seeing about negative 12 or 1300 on the NYC AD, which is, it's weak. It gave us that directional move, but it's not like that extreme weakness that we see on trend down days, something like minus 1700, minus 2000 on the AD line. On those days you don't want to bother with counter trend because it's a broad market sell-off, it's a liquidation, and you don't really want to step in front of it because it's only going to be a 2 or 3 point pop, and then it's usually going to continue heading lower. That's what happens on a trend day. But this wasn't shaping up to be a trend down day, right? So if you did want to take it, you definitely want to be out of your short trade by here. Very good target on the short side. But at the same time, this is also a decent spot to get on board and trade it on the long side back up to the IB low and this broken support zone, which is now acting as resistance. And then beyond that, the next trade setup is actually short over here again, right? Because even though we're getting these bounces, it's still a pretty directional day. Especially if you look at TF. I mean, TF made a huge down move on Friday and was extremely weak. And, this was not a day that was going to reverse, right? So you can get bounces, but it's not a day that's going to go up and, break through the IB high. That setup is just not there. The market is directional. Even though we're getting these pops back up, and this is pretty decent pops, the market is still directional. And on directional days, the 24-hour VWAP is a very key inflection point, right? So up here you have a confluence of resistance. You have this broken support zone, which is now acting as resistance, and then you also have the 24-hour VWAP working in your favor. And then you have that 64.5, big HVN as well. So as you get this pop back up towards the 62, 63 area, you can hop on board for a short side trade, put your stop above the 64.5 HVN. So again, it's about a 2.5 point stop, and you're targeting a move back to potentially new lows, right? Now we don't know if it's going to go all the way down here, but there's still that potential that on a directional day, typically the low is not put in the first hour or in the first, even in the morning. Usually you will get another swing low, and that's really what plays out over here. So this is a short setup for a move back down to retest the lows. And once we retest the lows, at that point we look at the internals, right? So if we just zoom forward on this 1 minute chart, we can see that again the internals are not getting worse, right? If you recall, in the morning, the AD line was actually weaker than it was in the afternoon, right? So technically that's a positive divergence on the AD line. It's a very minor one, but it still tells you that this market is not getting any weaker heading into the close. You're at pretty decent support. The other markets were at very decent support. NQ was hitting like a major swing low. The 35.1675 is a prior pretty important swing low in NQ. You could even say it's like the short-term balance area low at this point. And similar scenario with TF. 11.16 was an important support area in TF, and both those markets had already hit it, tested it, and now they're attracting responsive buyers. And this market was not it's not a trend down day. And you can see that once we get this pop back up, we're getting pretty decent tick readings, right? Plus 800, plus 850 on this pop back up. Usually you're not going to see those type of readings, especially in the afternoon on a trend down day. So at the very minimum, once you push down to these lows, you want to take profit on your short, but at the same time, it's very likely that buyers are going to enter. It's just a matter of, is that within your plan? Do you still want to take counter trend trades on a Friday afternoon? Because usually we want to be more cautious and just more conservative heading into the weekend. There could be some squaring of positions heading into the weekend, and usually, I personally don't even trade Friday afternoons. The afternoon session on Fridays, I don't trade it. But if it's within your plan to be active even in the afternoon, then you want to be on the right side of the market, right? And these are some of the observations that you can use to position yourself on the right side. So you can see that we get a new, or not a new tick high, but a pretty decent tick high up here. And then as we see these -500-600 tick readings on the NYC tick, we're not really getting a whole lot of response from price anymore. And the AD line's actually improving, getting a little bit better, especially compared to the early morning. And from there we just kind of find support, stabilize within the zone, and end up heading back up. So the final trade of the day, if you were still trading, would be on the long side. But really the main trade that my focus was on the short side, to get that directional move from 67, 68 down to 55 to 57. That was really the main trade idea. So short over here, either add or get in at 65.5, target 55 to 57, and then because it's a directional day, this is a very key inflection point. You want to be short over here. If you took the long, then you definitely want to be out by this point. And then this is the final trade setup, short for another move down into the lows. So a lot of opportunity on Friday actually, and ended up being a very good day. So at this point, heading into the next week, if we look at the markets across the board, NQ and TF are at pretty decent support. So from here we could actually see some responsive buying come back into the market, and short term there could be very limited downside potential. So based on the fact that the other markets are at pretty decent support short term, ES has been relatively strong. I think that we have to be careful shorting the market here. It doesn't mean that we can't head a bit lower, but keep an eye on NQ and TF. If NQ starts breaking below 35.16, that would definitely be a red flag for buyers. But if we can hold above 35.16 in NQ and hold above 11.16 in TF, then there's pretty good odds that we're going to get a rotation back up and actually get some buy side activity here heading into the next week. So at this point, bigger picture, we know that the market had been quite bullish over the last week or so. At this point, we've had a pretty decent pullback, but now the downside potential is questionable. I think that the markets are probably going to stabilize a bit here, so I don't want to take any aggressive shorts at this point. In the S&P, if we can move back above the 62 to 64.5 area, that would tell us that the buyers are returning to this market, and we could actually be setting up for a move back up to the 71 to 73 zone, back up to that bull bear zone from Friday. So at this point, on the upside, that's really the main resistance we have here in the S&P, 62 to 64.5. That's the key inflection point. So we could get some selling off of that zone. But on the downside, this 54 to 56 zone is pretty decent support. And then again, keep an eye on the other markets and just watch and make sure that those markets are not trading below 35.16 NQ, 11.16 TF. As long as we hold those levels, I think we can now balance within a range. And the other markets are still weak, but now we're at that inflection point where we're going to find out, are buyers willing to step in here and take it higher, or is there going to be a change in trend? And then if there's a change in trend, then of course there'll be a lot of downside potential in the S&P. But for now, short term, these are levels we're going to be watching to see where the market is headed. So I hope everyone had a good trading week last week. Let's get prepared for the following week, and I will update you early in the morning.